Michelle, your take on the downward revisions here?
Well, I totally agree with what's been said in terms of the fact that the first quarter numbers, we knew were going to be soft. The fact they're just a touch softer than expected. The most important thing is, when you look at the monthly numbers underlying this quarterly report, you see that the momentum was gaining throughout the first quarter. The weakness was really concentrated early in the year, on the turn of the year, and the numbers steadily improved. So we enter into the second quarter with some good momentum, and that really I think explains why most people are already looking ahead to the expected rebound in growth to above 3% in Q2.
But Michelle, shouldn't we be expecting something at some point from the tax code? I referred to it with respect to equipment purchases, but shouldn't some money be coming into people's pockets and that show up with some pretty substantial fiscal stimulus?
Well, I am more focused, as you said, on the implications for corporate spending than I am for consumer spending. It's very late in the cycle, and in that sense, I'm not sure there's a lot of pent-up demand on the consumer side that's suddenly going to be unleashed when consumers have a bit more money in their pockets. I mean, this isn't the kind. I don't think you can get the same impact on the consumer that you'd see as you normally do when you get fiscal stimulus coming out of a recession or when the economy is much weaker. So to me, the real bang for the buck is going to come on the investment side. And as we talked about, good capital spending numbers this morning or in the first quarter, building on strength actually seen in 2017. I mean, for the consumer, I want to point out that's actually good news. I mean, if we do get continued business investment, which leads to better productivity growth, that should bode well for wages. I mean, I do think it can come around where the overall improvement in the economy, being from a business investment-led standpoint, is good all around. And of course, it's important to note, if it's investment-led, it's not an inflationary type of growth that I think the Fed would be worried about.